I want to point out one thing. This just came to my mind real quick. Not that this would ever happen, but God forbid this did happen, right? So let's just say you take out the all-in-one loan and you have, you have a line of credit for $500,000, but you're only use it, your balance is 300, for example. So you have $500,000 line, $300,000 is all you use, and God forbid you lose your job or you get sick and you're out of work for 4 or 5 months as you're trying to, to get a job, right? Because you have that $200,000 there, is it like you can go that many months in a traditional mortgage, you're going to be late on your mortgage payment, right? Because you can't make the monthly payments. But in this particular type of loan, you're not, because you have that equity there.
Yeah. You're dead on. You're 90 days away from defaulting, right? If you're not back up on your feet on a traditional mortgage and making those payments. Of course, there might be some modification or, sort of forbearance plan or help that a lender or a bank may help with, right? But still, there's no automatic kind of safety net built into a traditional mortgage. They're not designed to do that for people. The all-in-one loan it's the maneuverability you get over an extended period of time, 3 decades, that allow you to really, kind of flexibly get through those challenging times when they do occur. Because without question, the one thing that's consistent is that life is inconsistent, right? There's going to be another curveball that is thrown at us all, and each of us responds to or has to respond to that very differently than everybody else. But the all-in-one loan is a flexible credit facility that allows you to maneuver through those things without worrying about losing your home or going delinquent on your payment. In your example, you're absolutely right. You can, if you owe only $300,000, you have the $500,000 credit limit. Literally you could live for years off the line of credit. We have actually stories like that, Danielle, testimonials of people that have written into us through the financial crisis earlier last decade, right? Where people did lose their job. In fact, even during this COVID sort of crisis, there have been people that have lost their job or suffered income loss. And with the all-in-one loan, it's a safety net for them. It's the benefit of having that line of credit they can rely on and live off of until they get back on their feet without worrying about going delinquent or losing their job. They could do the interest payments automatic. And as long as there's credit available, that continues to be made automatically. You're never going late. It's extremely hard to go late on this loan, actually. So, and you kind of hit on a point by bringing this up. A lot of people ask us, Danielle, like, what's the catch? Why would a lender do this? Right? I mean, it's kind of an obvious question that I think maybe your audience would be interested in hearing the answer for. The reality is that if we make a traditional mortgage, the amount of loaded interest that comes with one of those is higher than we typically will earn, or our bank partners that support this loan with us will earn from a customer. However, a traditional loan typically pays off about every 5 years. It's about the runoff rate. About 5 years historically, mortgages are recycled. I would even argue that, given where rates have been, people have refinanced more frequently than 5 years into another mortgage for whatever reason. So even if we make a long-term mortgage, like a 30-year or a 15-year, the chances are people will lose that customer sooner rather than later, right? It'll happen pretty quickly. And that's costly. It presents a lot of risk. With the all-in-one loan, we just don't have that problem. Again, it solves that issue. It's a stickier loan product because you have this flexible credit facility. You can pay your balance down to 0 and you don't have to close it. It doesn't close automatically. You can continue to borrow money when you need it in the future and pay it back down. Many of our customers actually have paid off their house several times using the same mortgage because they borrow from themselves and go renovate or go, travel. And then power it back down to 0 again. So it just creates a sticky relationship, less risk as well, where that delinquency and default is less of a issue. In fact, we have no delinquencies, no reported delinquencies or defaults to date. So it's an enormous benefit for us as well.
It's their loan for life.
Yeah. It's the only last loan you might ever need on that property.
Exactly. Yeah. No, I love everything about the all-in-one. I really, really, really appreciate you being here and explaining a lot more about it. And I think it brings so much value to everybody. So if anybody's looking to get more information about the all-in-one loan, you can call me. My phone number is in this video. And I can also walk you through the simulator, as I mentioned before. You can go to aioloan.com, you can do the simulator there, but it's also important to make sure that you're inputting the right information, just so that all of the simulator actually, comes out accurate. But I'd be happy to talk to anybody about the all-in-one loan if you're a real estate agent or a financial advisor. I know Dave had mentioned before that he is more than willing to do a webinar for groups. So if you want to do one for your group, we would definitely be happy to get that set up. And I'd love to spread the word about the all-in-one loan. So I really appreciate it, Dave. Like I said, all my information is in the video, and I look forward to helping more people and getting them into this loan and bettering their life. So
my pleasure. Thank you, Danielle.